Hello and welcome to Macro Mondays, brought to you by David Gokhshtein and the Gokhshtein News Network. I'm your host, Landy, and today is February 23rd, 2026, and we're looking at Bitcoin to start today. We haven't had really anything too interesting happen outside of Bitcoin, I should say. No, I'm just kidding. There's been a lot of very interesting things, of course, across all of X in particular, with a lot of different theories and some people who I guess are going to get outed by some of the more popular on-chain analysts and stuff like that. But what does that mean for Bitcoin? Not a whole lot. I know that some are attributing, the dump off at session open today to that, and that is really just not the case. Things were kind of headed this way anyway. And this is some of what I talked about last week. So Bitcoin is moving from a very big daily expansion and then is going into a compression here. And this is a lower volatility period of time in comparison to the big downtrend here, as Bitcoin was getting full on expansion to the downside, to and through the important levels that we've been talking about for quite some time. Let's go ahead and zoom in here. And we can see that the range is breaking down. We have a very clear downtrend with a very clear invalidation of this downtrend, or the area in which we would need to see Bitcoin close back above to break the downtrend. That's going to be at 68,683. So basically 68.7. That would break the downtrend, bring Bitcoin back into range. And right now, Bitcoin did test into the lower second standard deviation. Now, over the weekend, as we saw price compress, we did get the lower second start to move up further to right around that 63,850 area, $64,000, and we got a test right to it essentially, and then now we've seen it kind of slightly tick down a bit here at the lower second. If we do see a break below right around the low from yesterday, I would say I'd give it on a close, because when looking at expansion into compression, you want to not just see swings, but you want to see closes. If we do see any price action below in the lower term timeframes, lower than the daily here, below around $64,000, look for that 63.8 to the lower second, right? Which there is an area of interest right around 62.8 to below the lower second, to the lower third rather, to right around $62,000, 61.8 region. So a little bit of a zone there, right around the lower third standard deviation. If we do see a close below that 63.8 and that lower second standard deviation, if we haven't already tested 62.8 to right around 61.8 here by the lower third, I would look for that. Anywhere below there, I would be looking for a retest of the low between $58,000 and $60,000. So that would be on expansion. And if that breaks down, I'm looking down to 55 to 58 initially. And then from there, 48 to 50. And to the upside, obviously, if we do see price action closing back above 68.7, we can start entertaining trips back to the close open here, just below 70,000 there at 69.8 to the swing, right around 71. And if we did see price starting to push above 71, look to that 72.2 region. Anywhere above there would put Bitcoin through the top side of the range on expansion above the upper second standard deviation, initially targeting around $74,000 to $75,000, right around the upper third. Now, the reason why I point out, and the upper third right now is at 73.7, right? Now, 73.7, when you look over here, is not a direct retest of any of the lows here at like that 74.4. But if we were to get a close above the upper second standard deviation, that would put it, the 73.8 region is right around the prior highs here. That 73.835 on the highs over here. And realistically, we would be getting expansion. So you would see the upper second and upper third start to move up pretty aggressively. And that's where we could see 74 to 75. Anywhere above there, I'd be looking 75 to, or I'm sorry, between 75 and 78, and then 78 to 80 for a direct retest of the breakdown from this low right here. So pretty easy, pretty simple. You notice that I'm not throwing up a bunch of support and resistance areas of interest because it's very, very simple. These are areas that I've been talking about for quite some time, from the higher term timeframes to the lower term timeframes. And all you need to know is below, 63.8, 64K, look for the low 60s, 62.5, 62.8. Anywhere below there, below that 63.8 on a close, we're looking for, if we haven't hit that area, for expansion into that area and potentially the low at 58 to 60. Below there, 55 to 58 is the zone. Below there, it's 48 to 50 and to that 55 essentially. I'd be looking there initially before anywhere in the mid to low 40s. And then to the upside, it's really about breaking above the high at 72.2, and then we can start looking 74 to 75, and then 75 to 78, 78 to 80. Pretty straightforward stuff. I could go through and bore you with the overhead areas of interest and the current area of interest and all that kind of stuff, but I've shown it so many times now that I think it's just easy to understand if you just look at the bands and the compression that we are now in. So expansion to compression, and note the areas where the lower second is. And then you're looking for expansion to the next area of interest, in this case, around 61.8 to 62, or anywhere in between that 61.8 to 63.8 between the bands here. If we close below the lower second, that's not an immediate, hey, we're immediately looking mid 50s and low 50s and stuff like that. But at minimum, we'd be looking for expansion into the lows here around 58 to 60. And if we saw a breakdown from 60 in this case and 58, which is that weekly level of interest, then I would be entertaining expansion to the mid 50s and under to the low 50s. Same goes to the upside, break range to the upside. We're getting expansion to retest areas, 74, 75, 75, 78, 78 to 80. And that's, I would take it in order because those are all weekly levels that I'm pointing out. Now, what I do want to talk about is the weekly, right? The weekly is pretty straightforward as well. There's nothing bullish about closing below the 200 period exponential moving average, right? And in fact, you can see where the lower first standard deviation of the Bollinger Bands is, and this would maintain trend upon retest. If it doesn't close above there, then we can't even entertain trips to, the 100 period exponential or any further up, which is right at 85. But at 75, we have the lower first, meaning that you can swing above there, but no closes above, and we're not entering any kind of true mean reversion test towards the basis. It would be testing the basis later lower. And closing below the 200 period exponential moving average, unless it can recover fairly quickly, I'd be looking for a retest of the lows somewhere around that lower second to the 200 period simple moving average in this case, which is 58, to the lows at 60, anywhere below there. And you can see that the lower third standard deviation is now pushing below the 377 period exponential moving average, right around that 48 to 50, depending on your chart. In this case, spot is what I like to use, and it's at 48. So I would take into account the 55 to 58, which would be, getting below the 200 period simple moving average. And in the mid 50s, around that 55 to 58 is going to be an important area right around these lows in here, to the actual, 48 to 50 at the 377 period exponential there. And that is the bottom side of that range. Essentially, $49,000 was the ETF high. That was also this range that we're trading in. This range is low as $49,000. So we had the ETF highs over here. Well, it was just prior to the ETF highs at 49, come down, hit the monthly at 38.5, almost directly at 38.501. Get the new all-time high prior to the halving, and then come down to retest at 49 where it put in the high. And pretty straightforward stuff. Nothing too crazy there. Yeah, I messed it up. There we go. Fixed. Okay. Let's go look at commodities real quick. Gold is now headed back towards the upper second standard deviation. Just beware of the highs here at 56 to the low at that 4,400. Right, this is a big range, and it was a big rejection from the highs and a big rejection of falling through supports. So I'm actually going to redo this chart just a little bit here. There we go. And this is where, this can continue to plumb the highs. It's still in a very high volatility environment, as noted by BBWP here at 98 over 98, but it is getting a little hot up here. So I'd beware, even if it makes new highs toward, above 58 to like 6K or even the low 6K region, beware of where it could potentially throw bearish divergences from. So RSI crossed above alert level high, we put it right at the highs again. That's an 85 read up here. Currently that's at 57. So, it could potentially push up there, and but it's sitting in a really hot place right now in terms of a read for RSI. Doesn't mean that it can't go and swing the highs. It's all about the closes at this point. So it can close higher, right? Because where did this close? This closed at below 5,000, right? So this last close open and the prior close opens, right? It's all about where it closes. So it would need to close above the highs while getting RSI above that 86 read over here. And this is where, it can swing like 58, 56 to 58, maybe even push 6K on a wick. But if it closes anywhere back inside of 56, it's looking like it's going to need to cool down and consolidate for a while, or it's going to get a big correction. And now this was a big correction down from 1 week, going from a high to a low, right? A massive swing in the gold markets. And the same goes for silver. In this case, daily, we can see 5,400 to 56 is going to be the play to the upside if it continues. Nice higher low to a trend break. So, 54 to 56 is the next big play if it does continue up from here. And I would say, anywhere above 48.50, 48.40 level at this higher low here is going to be what you need to watch for the daily. As it relates to silver, silver did get a downtrend break finally above 86.30. And now it's all about 90 to 92 overhead. And then above there, 95 to 96, up to about 100 to 102, right, by the upper first. And it needs to hold right around, in this case, the low here at $72, and then, of course, the $70 range over here. So if it can hold the lows, then it's likely going to go test some further up. So I wouldn't be surprised to see silver starting to get in towards the $100 region again, as long as it is, as long as it's above that 72 region. But if it does start to reclaim below 85, I would expect some more consolidation. So just beware below 85 on closes, that we're likely looking at consolidation, or we need to see it come down to like 78 to 80 down here by the 55 EMA, and potentially higher than that at the 82 region at the 50 period simple. But realistically, just give it some time and watch it carefully, because if it does start to reclaim 85 and below, it's headed towards that area. And then you have to watch that low 75 to 72, and then 70 fairly quickly thereafter. Weekly is looking like, if it does want to push up, like I said, that 98 to 102 is the upper second standard deviation on the weekly. So that's going to be right here. Oil, flirting with the range highs over here off of the low side structure that it did break through, but it's starting to find resistance around the 100-period exponential moving average. If it did start to move through the mid 60s towards 68 to 70, be very, very careful. That is where the where the weekly upper third standard deviation is. Likely you would need to see a correction, and anything back below 61 is going to lead towards a retest of the $60 region. Natural gas ticked up and then right back down. Now we know here in the United States, East Coast is getting hit pretty hard. It's fairly cold in the rest of the country, but reserves seemed pretty solid for natural gas. But if it does rally, this is where it's going to be from. The sell-off back right to that $3.06. Well, it's basically $3. Not too crazy, but this could become a low. Of course, if it drops 290, we're looking 280, and then potentially even further down to the 260 to 250 region down by the lower second. If it does happen to push through like 350, we can start looking, 390 to $4 by the basis band on the weekly here. Not even going to bother with the daily. Just watch it carefully and see kind of, if you're in the commodity sector, there's a lot of things that you have to watch with natural gas. So I would just say, watch the 340 to 350 level if it does approach that, because it could very easily jump through it to the 390 to $4 level, and even more, in fact, up into the 450s, 460 areas, because this is just a big range right now. All right, let's go look at traditional markets. We have a bit of a breakdown here on the daily. We did close below the higher low. You might remember that I talked about this low side structure being built, and I wanted to see closes above 49.50, and I didn't see it. And what did we see? A move right back down to the 55 and the low right at that 48.30, and a close below, indicating that it might bounce in lower term timeframes, but look towards the mid 48s, 48.5 to 6. If it does start to expand through there, 48.4 is another big level. Then it's all about 48,000 and where that 100-period EMA is on the daily. Invalidation of a continuation down for right now would be 49.9 for Dow. And what we saw is exactly what I was talking about last week, and that is that when we saw a rotation from boring stocks, I guess you could call them, to from tech to boring stocks, and then they have now corrected. Well, tech tried to hold some things up, but also saw a correction with it, as we're seeing more risk off in the markets, and that's noted by the moves that we're seeing in the bond markets as well. So if this does push through the lows, we went right back to the lows essentially with another lower high here, and that's going to be at 25.77 for NASDAQ. You can call it 25.1 is what you need to see break to the upside on the daily. But right now it's about 24.5 by the lows to 24. What is this? 24.387. Start seeing it trade below there. We're looking 24K and under, down towards the 200s that are crossing here. That's the 200 EMA and the 200 SMA, indicating that we're going to see a slowdown, and potentially, even if this rallies, we're going to see this tested probably sooner rather than later. And if we continue to see Dow sell off, we are going to see this structure start to roll over for NASDAQ, and then, of course, SPY. If it loads, there it goes. SPY, same deal. Low side of the range is now where the 100-period moving average is. This is where things get dicey, because if SPY rolls, it's in a much weaker position than even NASDAQ. at this point. And if this rolls 675 and under towards 670 to 672 and starts closing below there, it can save itself around the 670 low here. But realistically, it's, it's right around the high side structure at 672 to 670. Eventually, I'd be looking all the way down in the mid 650s to 660. So 655 to 665, because we do have the 200 exponential moving up and the 200 period simple moving up as well at 650, 651. I think by the time that would meet, that'd be somewhere around, at minimum, the exponential and simple probably around 655 to 665. So about a 10-point zone of interest. And of course, any moves towards 650, and we're looking, for essentially a retest of the November of 25 lows over here. So I wouldn't rule it out. In fact, this looks like it does want to roll over with the lower high. Invalidation, though, do need to know the invalidation. And that would now be above, right around 694 to 695 on the highs here. So we'll go ahead and mark that. And that's pretty much it for today. I don't really have too much more for you. I got started a little bit later today, so IWM and some of the others, Milo specifically, I'm going to look at some of those. We're going to have to save it for a Wednesday check-in or a Friday, mainly because I was a little bit late. I mean, IWM is, we can check IWM. Let's check IWM. Hey, look, it's at this, it looks the same. It's not too much different, I should say. And this is just the ETF for the Russell 2000, which is, going to mirror the rut. So, which is also looking like it wants to roll over and head towards 2,500 or so. In this case, 250, right? 250 is where the 100 period is. And then potentially, the 245, which would be 24.6 for rut. But, nice move up in VIX today. So if you've been paying attention, what have I talked about? If you're going to take any kind of longs, when we were at the highs, the optimal time period to hedge was to hedge in VIX at a 13.38. And talked about this, and good validation of that was back here in December at a 14.85, and then through January when it recovered there and then started to spike it and hold it and then continue up. So it's been a slow roll with volatility to the upside, and part of that is due to, chopping around the highs in a range. But as VIX continues to increase, we're probably looking, if it does continue up, we're looking at a much higher volatility environment. So beware of the swings and beware of fake outs. But if we see it start to really race, well, we're headed to the downside in this case. Why does volatility work that way in traditional markets versus like everything else, right? When you're looking at the dailies, because by and large, when you're looking at the indexes here, they're up and to the right. So when you're seeing an increase in VIX in general, it is going to be because we're in a large downside move. When you see a Six Sigma event or something like what we saw back here in April of 2025. So, but otherwise, typically you're going to see volatility is direction neutral. So, and in this case, why would volatility be picking up if we close below the lower second and lose and head down towards 650, for instance, for SPY? You're going to see that VIX will jump massively because that would be a daily expansion to the downside. And typically, when you start slow crawling back up, because bulls take the stairs and bears take the elevator, this will bring VIX down as it's on its way up, as it kind of stair steps its way up. When you get this increasing volatility, like what we saw since October of last year, and then really that mean reversion to, and then the holding of VIX at higher levels was telling us that, we're compressing at the highs. but we're increasing in volatility. And if it breaks down, that's when we get that really big VIX read, is when it breaks down. So, yeah. That's all I got for you today. I hope you had a wonderful weekend, and I hope you have a wonderful week ahead. Please like and share this out there. And yeah, we're going to get into some, I think throughout the rest of this year, we're going to get into some interesting things where I'm going to start really opening up the book on knowledge outside of, the things that I typically talk about, because, I talk about them on stages a lot. On X, but I don't necessarily talk about them on video. And I think that it would benefit everyone to actually see what I'm talking about on the actual charts. So, yeah, like and share this out there. I appreciate everybody that does and supports and watches and learns something. And yeah, I look forward to talking to you again on Wednesday. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that said, Landy out. Take care.